G'day folks, welcome back to another update for natural gas. Well, the price has pulled back to that key support area again after fluctuating for a few days. Before we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook for natural gas, as of today, January 9th, 2025, the natural gas markets are experiencing increased volatility due to rising demand from AI-driven data centers and electric vehicles, alongside geopolitical tensions and energy policy shifts. In terms of the ETFs, BOIL aims to deliver twice the daily performance of Bloomberg Natural Gas Sub-Index, making it suitable for short-term traders seeking amplified exposure to natural gas price movements. The KOLD seeks to achieve twice the inverse daily performance of Bloomberg Natural Gas Sub-Index, appealing to traders anticipating declines in natural gas prices. And for UNG, tracks daily changes in natural gas spot prices through near-month future contracts, offering investors direct exposure to natural gas price fluctuations without leverage. In terms of the market outlook, high volatility in leveraged ETFs like BOIL and KLD makes them suitable for short-term trading only. Investors are also monitoring geopolitical tensions and seasonal weather impacts on natural gas prices. In terms of AI, the expansion of AI technologies is significantly increasing electricity consumption in data centers, with projections indicating that US data centers could consume up to 606 terawatts an hour by 2030, representing 11.7% of total US power demand. McKinsey & Company, this surge is expected to drive an additional 3 billion cubic feet per day of natural gas demand by the end of the decade. So first we look at the long-term trends, and we always look at the monthly, the weekly and the daily. And for those new to the channel, if you want to learn how to draw these moving averages, they're in a different video in the description below if you want to access that video after this one. But basically on the monthly, the price is broken above those moving averages, giving us a somewhat a bullish outlook. Likewise the CCI. And the way you work this is if you're trading on the weekly, you take the trend in the direction of the monthly, or you're trading on the daily, you take the direction of the weekly, and so on. So you only go long in this case on the weekly, and also long on the daily due to the weekly being bullish. On the weekly, you can see that it's been bullish now for a number of months now, since early September, and it's still bullish. Both the CCI and the price are above their moving averages. On the daily, however, we did draw this ascending diagonal trend line. And you can see that it's really loving that trend line. It's actually bounced off that quite nicely a couple of times, and it's currently sitting there in that mid-range. Now you notice here as well on the daily, it's still bearish. The CCI is broken below that moving average, and the price is looking like it's actually trying to get below that moving average as well. At the moment, it's above the moving averages. So to go long on the daily, we want to wait for this to break higher on the CCI as well to be more confident. Now if we go to the intraday charts, same principle applies. If you're trading on, I've got the 1 hour here, but you can interchange this with 2 hour, 4 hour, etc. So if you're trading on the 1 hour, as in this case, you only take the trades in the direction of the daily. So you would have taken those trades there when it was going short in alignment with that daily bearish outlook. At the moment, it's still moving to the upside after bouncing off that resistance, as I said, and it's above the moving average of the price and also above the moving average of the CCI. So avoid going long until we see this break above that moving average on the daily. So, or alternatively, if this breaks below again, like it did back here, you take short entries. And the way I trade this, I look at, if I drew a ruler, so during that period there, when it broke below that, just below that moving average of the price, and also below the moving average of the CCI, take a short entry, and you would have done it assuming on the close of that hour. And you close a position when that CCI breaks into that moving average range. So you would have closed it out at the end of the trade there. So that was in 7 hours, that was a 1.1% gain on that little trade there. You could have actually exited early, but sometimes exiting early when I see the CCI rising, it can actually bounce back down again. So it's always good to sort of let it hit that moving average range to exit the trade. Alternatively, sometimes you can actually trade with the price, but you'll notice there that would have given you a very similar outlook as you waited for the price to break outside of that moving average. So what I do is take these little short trades, when it hits that moving average range, close a position, enter again on that candle there, and you would have closed it out on that candle there. That was another 1.45% in 10 days, 10 hours of trading in that little range there. So that's how you trade basically. So for BOIL on the monthly, it's still well below its moving average range, giving us a bearish outlook. There's no CCI for it on the monthly. On the weekly, we did have this bullish movement on the CCI versus lower lows on the price. And I wouldn't go long on the daily based on this one alone, because that's still quite bearish in terms of the price movement. I'd like to see this break a lot higher, and I'd like to see the moving averages start expanding a bit more, like it did back here, for example. Now that's on the weekly, so bullish divergence on the weekly versus lower lows on the price. On the daily, you can see there it's bullish, so would have been quite safe to go long on that one based on the weekly bullish move. So again, the way you trade this is go long when that CCI breaks above on the moving averages, and also long on the price when it's above the moving average. So you would have entered there long, and don't close it out until the CCI breaks into that moving average range. So you would have got out at that point there. So in 14 days, you made 8.1% gain on the trade. That's on the daily. So if we go to the intraday chart, same principle applies, going long only on the intraday chart. So again, the daily's bullish. You can see there it actually hasn't quite reached that trend line yet, but you would have gone long during these periods back here, and another long entry there. Now this one would have been a small loss, because that would have broken down if you put a stop loss below that previous candle. Otherwise, you would have gone long on that one, and at the moment you're still in a trade, and you wait for that CCI to break into that moving average range. Otherwise, you put in a stop loss below that area there. Also, I did back here put in a Fibonacci extension, and you can see there it actually hit the 200% level just above it, and it retraced back down. Sometimes it's a bit hard to sort of measure these Fibonacci extensions. You need to draw them once you get that pattern happening and see where it's going to eventually stop. It did pause around the 100% level, bounced back down, and went up to the 200% with that gap up on that day. So for KOLD on the monthly, it's actually broken below this moving average range on the monthly, giving us a bearish outlook. There's no CCI for it currently drawn on the monthly, but assuming that's a bearish outlook. On the weekly, it's also been fresh breakout to the downside going back to November, with a nice big strong move to the downside, and the CCI is still falling. So only takes short trades on the daily, and on the daily you can see here you would have taken a short entry on that candle there, and you would have exited when that CCI touched that moving average range, possibly on that candle there. That would have been a 23% move on the daily in 15 days. Now if you go to the 1 hour chart, again taking short entries only, you could have started back here during around 11 December 2023, so that was during back this period. I've drawn a Fibonacci extension here again. It hit down at the 161% level, but you would have taken the first short entry back there during that period on the daily when it broke below. So that would have been a nice little trade to take, and you would have gotten out with a, it's a bit hard to read, let me just zoom in a bit. So you would have got out on that candle. That would have been a 0.6% gain in 5 hours, so not a huge gain. Go short again on that candle up there, and close it out when the CCI breaks into the moving average range on that candle there on the close, and that was a 10% gain in 15 hours. Another short entry there on that one. That would have been a loss, and another short entry there. That would have been a nice gap down, and you would have got it out at that candle there. It was a 20% gain in 8 hours, and so on. And this one would have been probably a small gain, if not a break even, and you would still be in a trade today with this breaking below as well. And that'd still be an open trade at the moment, going short. For UNG on the monthly, we're showing a bearish outlook on the price, but a slight bullish movement on the CCI. So again, I'd like to see this break above that moving average to be more confident in line with the CCI. So I'll call that a neutral positioning at the moment on the monthly. On the weekly, we did have a bullish divergence here, higher lows on the CCI versus lower lows on the price. That continues right up until this point. And again, I'd like to see this break a lot higher than that previous high to be more confident of going bullish based on the weekly. And on the daily, you would have taken some long trades there in accordance with the weekly. And so you would have got in there, if I drew another measurement tool from that high of open of that day, and you closed it out when the CCI breaks into that moving average, which would have been at that point there. So 7% gain in 15 days. Going to the intraday chart, again taking only long trades. It's a fresh breakout on the daily. you would start with that open position at the moment on that one, and you'd wait for that to close when it breaks below on the hourly, breaks into that moving average range. So again, that's how you trade these little swings when the higher time frame is in that direction.
To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.